If the giant mistake is whether they go in December, no, I think it would be a mistake not to at this point in time. It would be signaling the market that they're scared, okay? But what they say about going forward into 2019 is crucial. Look, we got problems in the world, right? We got China slowing right now. It's very clear, and it's the effect, at least in part of the trade war that's going on, and that has trickled through to the rest of the emerging markets. The Fed has to acknowledge these risks are out there when they say what they're going to do in 2019, or they will be.
Why are you so sure that they have to go in December? Wall Street Journal today. Here it is. Op-ed, right? America is not an island. They say, quote, start with the Fed, which should rethink its December rate increase. No other major central bank is likely to raise rates soon. The Fed needs to weigh whether it should expand the gulf between U.S. and foreign monetary policies at a fragile moment as global investors demand more dollars.
Listen, it's a great point, Scott, but it's called signaling. If they don't go after everything that's been set up, and we're 3 weeks away, if they don't go, they are signaling the markets be very, very afraid. And I'm telling you, that's not a message they want to give. They can do this. They can have the same positive effect, frankly, if they just give the right guidance for what they're going to do in 2019. And that guidance is data dependent. We'll see. We're not committing.
Okay, Steve, you saw Cramer then. Here's Cramer now, and we'll react on the other side.
So many CEOs have told me about how quickly things have cooled. So many of them are baffled that we could find ourselves in this late cycle dilemma that wasn't supposed to occur so soon.
Is the Fed asleep? They fully realize what the economy's doing, what CEOs are saying?
I think they understand. Clearly, they meet with CEOs all the time. That's part of their job. To Jim's point, I think the market would go up if the Fed didn't hike, because that's what markets do, right? But here's how I think the Fed's looking at it. The Fed is very deliberate. They take their time. They weigh all the inputs. While the U.S. isn't an island, the U.S. is experiencing incredible growth. So they've got to get in front of inflation, because we could be sitting here in 6 months if the Fed did nothing and said they were asleep. They didn't do anything. So you have to anticipate. You have to go to where the puck's going to be. Now, it's undeniable that not just China's slowing, but Germany showed a contraction. Japan showed a contraction. And
that goes to the heart of the op-ed, right?
Right.
Not an island.
Right. So
you can't ignore all of these issues that are happening all around the world.
Right. So I think they do go in December, but I also believe that they think twice about their plan next year for 3 times.
Rebecca Patterson, how are you thinking about this? I think it's one of the biggest questions now facing the stock market.
I mean, I would echo some of what's already been said. First, U.S. growth, while it is cooling, is still very robust. I mean, Q3 right now is tracking at around 3.5%, Q4 still above 3%, and the Fed's own forecast for next year is 2.5%. That's the same as consensus on Wall Street. So the Fed is expecting a cool down in the U.S. I think what they have to gauge is how much feedback could we get from the rest of the world to the U.S., and the trade war, depending on how this evolves over the next few weeks, what happens in January, how that affects sentiment, how that might feed through into real economic data is also going to affect their thinking. But I was very encouraged this week. We had a lot of Fed speakers, and almost all of them mentioned the global economy's cooling. We have to think about it. So I think they're very much aware of what's happening overseas, and they're thinking about how does that feed into their own growth and inflation targets.